name's Bradley Kohn. I've been in the space about 8 months or so, and it's quite a nice full circle for me to be interviewing Vinny, because Civic was the first ICO I invested in. And I'm not from a financial background. I didn't know much about much. I'd been investing in crypto for a couple of months, and everyone said, oh, you've got to get in the ICOs, you've got to get in the ICOs. And I didn't know anything, really. And I was looking around online, and I saw this guy who seemed to know what he was talking about. I was reading his white paper, and I saw that they were raising a certain amount of money, and that if they closed all the money in the pre-sale, they were going to refund a third of the money to the investors just to make space for people to get in on the open market. And I thought, wow, that's quite an interesting move. That sounds like very integrous to me. And so I thought, yeah, I like this guy, I'm going to go for it. And I did, and it was probably the best investment I made up until that time. And Vinny and I got to kind of see each other on the circuit a little bit. So this is really nice for me. So yeah, I wanted to ask, you've been called the Bitcoin Oracle, and you seem to have a very pragmatic approach to the way you analyze markets. And I wondered, one, do you have a background in finance? And two, what are some of the things in your experiences and upbringing that led you to consider things in a way that sometimes I think you consider information that other people miss, and you're willing to kind of go out there and stand by your convictions as well. So I wondered what makes you that way.
Yeah, so I'm from South Africa originally, grew up there. I'd say it's a very reasonably conservative society we grew up in. Obviously, I grew up during apartheid, and then when Mandela became president, things changed. But I had a very diverse background. I did a bit of everything. I was programming since a kid. I studied information systems in a commerce degree at university, so I had to do programming and business. So just a little bit of everything: economics, accounting, etc. So, like the whole Bitcoin Oracle thing was great up until this year. This year was one of those years where I'm still flabbergasted. I don't think anyone would have predicted Bitcoin at $12,500 right now from the start of the year, especially since it still hasn't technically dealt with some of the scaling issues. But we'll see how it plays out. When I look at markets, I try to understand fundamentals, and so I'm very much a fundamental-based investor. And being conservative in crypto is probably not a good thing in the current market. I mean, when you're such a bull run, you should probably be a little more aggressive. And it's a lot easier, I suppose, when you're younger. And a lot of the I've written about this. The young millennials out there, when they're putting $10,000 up, they've got nothing to lose. They don't have kids. They don't have families. They lose 10 grand. They lose 10 grand. It's not a big deal for them. And when you're older, it's a lot harder to put up 100% of your portfolio into a cryptocurrency. And so it's a very interesting dynamic, and as you go older and your wealth base increases, that you become a little bit more conservative for good reasons, right? There's no point betting the farm if you don't need to. But in the case of a kid who's got 10 grand, I mean, he doesn't have much, so why not put it all on Ethereum or something? Bitcoin makes sense. Again, I tend to be the guy who's like, I don't know, when the markets are depressed, and when Bitcoin was at like 400, I wrote a post about how it's going to go through the roof, and everyone was like, "This is great," and a lot of people sharing posts around, etc. And then when it went up, I was like, "Hang on, this is a bubble." I actually wrote a post saying, that there's going to be I was trying to prevent a bubble. I said, "Look, if we bubble up, we're going to have governments coming in, regulations coming in. If this thing grows too quickly, it becomes a threat to a lot of people. It's also just there's a lot of issues and fundamentals that haven't been resolved technically." And so I'm a bit wary and skeptical about even the prices where they are right now. But maybe I'm just wrong, and I'm just too conservative, and this market keeps going up, and we see Bitcoin at $100,000 next year or something, and that's fine. And I was wrong about it, I'll take that. But I'm seeing in the market right now a lot of issues around, you've got people look, the crypto anarchists can argue for whatever they want around sound money and government resistance, etc. But the reality is, what gives Bitcoin its value right now is the ability to purchase it using fiat currency, and governments control that. Governments can shut down fiat currency going into exchanges, etc. And so, look, it hasn't happened yet. I mean, I saw South Korea just banned Bitcoin futures today. China's already banned Bitcoin to some extent. These bans have some way of depressing the price. Look, my thesis is the Bitcoin price moving up too quickly. I mean, I had a target for $3,000 by the end of this year. The Bitcoin price moving up too quickly is bad. And if you look at the history of Bitcoin, there's been a number of bubbles and busts, and it looks like this one's going to be. If this is a bubble, it'll be the biggest one we've ever seen, and more people will lose more money than we've ever seen before in the previous bubbles. So let's just see how it plays out.
I was going to say Bitcoin predictions for later in the chat, but while we're on the subject, what do you think about the futures and about people potentially shorting the market?
The biggest issue is in a transparent world with Bitcoin and cryptocurrencies, where everything is very clear. You know, I mean, it's an open public ledger. We don't know what money the exchanges have. You know, like for example, there's a whole big discussion around Tether. Their balance sheet for Tether is like the balance sheet for Tether is nearly $1 billion, and there's no proof of funds around that. So it's kind of weird in this transparent world. We're okay with centralized exchanges not being transparent about what their reserves are versus what they've issued. You know, so it's just weird for me. And maybe this blows over and nothing happens. But I get a sense of like this is going to end not so well.
Yeah, fair enough.
And by the way, people are okay with things not being rational as long as you're making money. It's a human trait. If you own Bitcoin and the price keeps going up, don't worry about all that stuff. Just let the price go up. Like, that's the way. That's the way it is, right? You're vested in it, and you're vested in the success of it, regardless of like how it gets there. And I'm just fundamental driven, so I don't think the fundamentals support the price right now. But we'll see.
And I guess it's hard to see when to exit, right? When you're betting against logic.
Exactly. Well, it's not logic. It's, the thing is this, the money piling into Bitcoin right now doesn't understand the technology at all. 99% of the dollars coming into Bitcoin right now, they couldn't tell you what a hash was from a block size. They literally don't know the difference. And they just buy it because it's Bitcoin. And so that's a scary thing. I mean, that's dumb money coming in at this point, especially since the technology is not quite there. It's close, it's not there yet. And there are some risks.
Again, just while we're talking about the currencies and stuff, you and I have spoken a little bit in the past about Bitcoin Cash. One of the questions that I had is, it's people talk about it being faster and cheaper, but the mining pools there's a big overlap, right, in who's mining it. So how can they be profiting more from Bitcoin Cash at times, and yet the transactions actually be cheaper? I wasn't quite sure how that worked.
This is I don't know how much time we have right now, but this is a long discussion. The reality is that you've got two coins competing for use cases, really. Bitcoin Cash is competing on the basis that it's digital cash, digital money. It's not there's no layer 2 settlement, like for example, Bitcoin. Bitcoin's solution to scaling is that you basically move from your Bitcoins being cash to a settlement layer. You open up a channel with someone, you go back and forth sending coins, and then you settle once a month or once a year, whatever it is. And it's it's layer 2 scaling. And the argument for that is that it takes off pressure off the use of block space. And there's a lot of reasons why that's being seen as a way to scale Bitcoin. Bitcoin Cash says no, you just increase the block size and you have bigger transactions. And the notion of centralization of miners and whatnot is not as much of a concern. Look, I think that personally on Bitcoin side, I've been vocal about this. I think it's an extreme view that everyone in the world should be able to run their own node and validate their own transactions. I think like no one's gonna do that, like practically. So I've done surveys and like 99% of people, 99.99% of people do not validate their own transactions. You trust a wallet provider, you trust a business, you trust someone else. Like I can't see a world where we have more than maybe a couple of million nodes, but it's being designed for a world where everyone can run their own node, and that's half the issue. Like it gets costly, the block sizes get bigger, etc. And Bitcoin Cash has got a view that look, you don't need to have that level of validation. The thing is, I'm kind of neutral because there's stuff I don't like about the Bitcoin Cash side, there's stuff I don't like about the Bitcoin side, but I think it will come out in the wash eventually.
Right. So yeah, just going back a bit to your background in South Africa. How did your parents, influence your view as an entrepreneur, and how did you get your start?
Like my parents were entrepreneurs. I had food business. I worked in the weekends. I was one of those kids who always had money, but people thought it was because my parents had a business. It was just because I got paid like R7 an hour working on weekends. So I could work the whole weekend and I'd save money, and during the week I'd catch school. And I was one of those kids. I always made a buck somehow. I'd be selling computers. I'd be doing helping people set their computers up. And
Cool.
back in the DOS days, and like I used to design, write menu software and all that stuff. Like back in the days, you know, like people remember AutoExec.bat. You could put a whole bunch of cool stuff in there and run scripts and stuff. And so yeah, I mean, I was always like, I never really wanted to ever work for anyone.
Yeah.
I had a business, like in university, I was managing rock bands, believe it or not. I had these gigs running and concerts, and I made some money on the side there. And then I took on my parents' business for a while and didn't want to go into food, so I kind of left after a year. We had a bit of a fallout there. And then I went to go work in Johannesburg for a couple of years in the corporate world and realized that wasn't for me either. And then I started my first company, sold that. It was a search engine marketing business. I spent a lot of time. I spent most of my career working in the US, and I eventually moved here in 2008. So even though like the 5 years prior to that, with my company, we had sort of virtual offices here. I was here 6 months a year or 5 months a year, so I just enjoyed being in Silicon Valley, and I decided to move out here.
Cool. So you've suggested why perhaps your career took certain paths. After the data business you were talking about, you had this website building services, right, with Yola, and then the gift cards, the gift, right?
Yeah.
So maybe you could just talk a bit about that journey and how, you know, that. I mean, it sounds kind of logical now that you say that you were doing, you know, building computers for people and running code and that, but maybe you could talk a bit about that journey.
Yeah, it was more. I think the first couple of businesses I started were very opportunistic. I saw a gap in the market, and I started making money day one of my search marketing business, and we scaled it up to be we had Walmart.com in Brisbane, and Expedia, and Zappos, and a whole bunch of online retailers using us for search as a search engine agency. We made good money out of that business. And then I looked at where cloud computing was going in 2007. I figured, well, what's a really bad experience right now? And a bad experience was having to download Microsoft Front Page and get front page extensions running on a server, and just getting a website up and running was a pain in the ass. And so built some software around that. It's used more. Yola's been used more now for ISPs around the world. So a whole bunch of ISPs that just kind of white label and use them for providing website building tools for their small business customers. And so I spent a couple of years there, raised about $40 million, went the VC route there. I had some bad experiences, I would say, with VC, where we had an offer to sell the company, where we had taken too much capital in, and so the returns weren't good enough for the VCs and whatnot. There's some back and forth in that. and we just had a tough time with competitors outraising us as well, believe it or not. Wix and the likes of raised like $200 to $150 million at the time, so it was very difficult to compete. And then I went into mobile gift cards because I thought, well, mobile's taking off. Obviously, the iPhone was doing really well back in 2011, and payments was an interesting hot space, and digital wallets was a hot space. So built a gift card wallet. And one of the challenges we had there was dealing with payment fraud, and that's how I stumbled into Bitcoin and said, okay, this is great. Like we can take Bitcoin payments all day long and give people reward points instead of paying credit card fees. And it took off, and we became, I don't know what the numbers are today, but at one point it was the biggest Bitcoin retailer online.
Wow. Yeah. And so then coming to Bitcoin and Civic, I guess your experiences with VCs, did that influence how you went about your token sale?
Yeah, so I mean with GIF, we sold the company with First Data. I went through the IPO with First Data, and then I left to start Civic. And with Civic, we raised a small amount of venture capital from our investors, like $5 million. We were kind of oversubscribed with all my old investors who made money in our previous company, so it was pretty easy raising the seed round. It was a lot more challenging raising the A round. I think it still is challenging raising an A round in Silicon Valley. And so when we went out to VCs just over a year ago, I spoke to about 30 or 40 VCs, and pretty dismal response. I mean, literally, what's blockchain and what's Bitcoin?
Wow.
How does this stuff work? And why would people use a blockchain for opening up and unlocking websites and accounts and like silly questions?
I'm surprised. You would have thought here of all places people would. Yeah.
No, VCs are lemmings, so they only go after it when it's hot. They're like, if it's not hot, they're not interested in what the technology can do. It's like it's very interesting. And what's even more interesting is you see the VCs up on stage, like, we just back the team. It's always about the team. And then when I go meet with them, it's like, Vinny, we love the team, but they don't get this blockchain thing. And that was like a year ago, so it's kind of a weird dynamic. Like, you have a serial entrepreneur, a great team, building great product, great technology, but like the teams are important. But when I'm on stage, the team's all that matters.
Yeah, a bit of hypocrisy there. And you've spoken a little bit in the past about you know, apartheid South Africa influencing you towards the identity space. Could you talk about that in a bit more detail, perhaps? I think it would be really interesting to know what led you to Civic, yeah, both from a humanitarian perhaps point of view and maybe even financial in terms of, you know, what you wanted to do for your own business.
So the original business plan for Civic, my co-founder and I got together and we decided we're going to build this company called Civic. It was actually a voting platform. So we were trying to change the way elections are run. Now this is before Trump won, but you know, even then we had the foresight that there was a problem in how elections are run, and you know, like for example, if you use a blockchain, if you use a Bitcoin blockchain and you do it properly, or any blockchain, you could have a situation where like the Russians can't hack it, right? Everyone would have tokens, they would be voting in real time on their phone, you'd have real time tabulation of results, etc. So that's a really great goal, and the technology does exist today. But I spend a lot of time speaking to regulators and people in Sacramento, etc. And the reality is that governments are just not going to change for like 7 years. And the core reason for this is that they don't trust digital identity systems. They don't know that you are the person using the phone. They don't know that, and it's just because they, like, you know, the technophobes in a sense, right? They've been spent like, and the laws are crazy. I mean, I found that there's this one silly law where on the ballot paper, you've got to have some font that's printed in size 36, like Gothic, whatever, because that's the law that was written in 1855 or whatever. And so like the ballot's got to have these certain size fonts, and no one's ever bothered changing it. So like if you have it on the screen, it's going to be rendering like there'll be like one character at a time you have to scroll through on the screen. So these are silly things that need to be changed in how these systems are run. But the good news is a lot of countries around the world are moving to digital voting. Estonia is moving towards it, etc. And you're going to see this more and more. But we realized that the long-term vision of Civic could still be powering voting and democracy and changing the world that way, but we had to solve to solve digital democracy, you have to solve digital identity. So that's where we kind of, you know, sort of pivoted before we even wrote any code in the design of the business. And we said, okay, we're going to build a digital identity platform that can be used for a variety of things, including voting one day. And so the ultimate goal of the company is to actually, you know, solve democracy.
That's so interesting. I was in Barcelona. There was the World Blockchain Solutions Forum happening right as the riots were taking place, and I was thinking exactly that. You know, we've got the technology to deal with this problem and allow people to vote on a particular issue, whether it's their governance or anything else. And so once again, you're ahead of the game, and have that in mind. It's really interesting. Are there any other kind of subtle use cases for Civic which perhaps aren't obvious at this point, but you have in mind for down the road?
Well, I mean, like we just see ourselves as a multi-purpose tool. So you'll be able to walk through airports, into buildings, log into your bank accounts, store your Bitcoin or your private keys for your digital cryptocurrencies. The key thing about Civic is that we don't store any of your data on our servers. We give you a tool, an app where all the information is stored in the app, and you back it up to your own servers. So we're basically a data neutral network. We can't get hacked like Equifax and have all your data out there. It doesn't happen because we don't store it. It's only on your device. So you have to secure your own information.
Great. We have time for a question. Do we have any questions from the audience? Yes, sir.
Where do you think Civic will be headed to in the next 10 years?
I'll repeat it. Where do you think Civic will be headed in the next 10 years?
Well, I mean, I think the goal is we're launching our marketplace next quarter, and the marketplace allows companies to effectively vouch for people through attestations, and those people can use those ID verifications elsewhere. And that's just stage one. So how do you build a marketplace? Because the important thing is that we need to make sure that this is a community driven approach, where if you look at how you solve identity worldwide, it's a social consensus model. Okay, you can argue that, you know, self-asserted IDs are valid. They're not. Like, no one's going to believe it if you say, "Here's my ID," and no one's vouching for who you are. So you know, the self-sovereign ID is great in theory, but it's not true. You need social consensus around who you are. So we've got to make sure that there are enough nodes connected to our network that are willing to vouch for people. And we haven't had the problem of not having demand for the product. In fact, we're overwhelmed. We can't deal with people emailing us with leads. It's like we're kind of locking up right now. The issue really is the product's not ready, and so that'll be ready. You know, at least some part of it will be ready next quarter. But 2018 should be a big year. It should, I think, show people what we can do.
What has been the hold up in developing the product? Okay.
The biggest holdup is just hiring engineers
Right.
in Silicon Valley. We went to hire in South Africa and in South America, but it's just hiring people, and we're up to 30 people now. So,
wow. Yeah, question at the back.
You say you're going to launch next year. Who do you think the
So we've been, I wouldn't say focusing, but we've had a lot of companies doing ICOs come to us because they need to do compliance, and governments are getting stricter on compliance. So that's most likely where we're going to see a lot of traction next year, where companies doing this is, I mean, you see the stats around ICOs, billions of dollars will probably be done next year, and these companies need to verify the identities of people buying in their sales, and so we can become the platform for that.
Okay.
Do you want to say one or two more? Or?
Yeah, I think we can wrap up. All right, let's go around. Okay, sorry, we'll take one more question. We'll take one more question because we have a lot of people. Okay, one more question. Yeah.
Perhaps a recurring question. Miguel here from ICO Rating. So, thank you so much, Vinny. Very interesting presentation. You touched base on Bitcoin, and well, apparently, you know that already that 99% of the people owning Bitcoin these days probably with the technology. But you mentioned that fundamentally, the price right now is not justified. So, what do you think? What would be the right justification of this? Of the price of Bitcoin is right at 10,000, right?
Look, I think it's very clear that there's demand for non-governmental currencies in the world. Like there's very much, people are very worried about inflation, governments putting capital, etc. So this is the demand doesn't go away, okay? And so it's going to flow somewhere. It's going to flow into Bitcoin and flow into other cryptocurrencies as well. When I say the fundamentals, there are technical risks which may or may not transpire. I mean, for example, if everyone holding Bitcoin today wanted to sort of move those coins, the mempool would clog up in seconds. Okay, the mempool is like basically the transaction backlog. Bitcoin can handle 3 or 4 transactions per second at the moment. Now that's okay when everyone's holding coins because the price keeps going up. But if there's a market panic, do you realize how quickly that backlog will just grow in seconds and minutes? And you basically have the backlog clogged for days potentially, and you can't get your transactions through. Now, again, these problems only happen when things go the other way. When they're going up, everyone's holding, no one's doing transactions, no one cares, the price keeps going up. This is my point. Like, look, maybe we just keep going to $100,000 or $1 million and there's never another scare in Bitcoin, but I've been in this space for a long time, and there are lots of these scares. Mt. Gox happened, Bitfinex got hacked, etc. And when these scares happen, you see 20-30% dips, and people flee for the doors because they don't really care. They just see their money going down the drain, or they see the price dropping. And when the panic happens, you can't get your money out. And then the fees are spiking to $100, $200, $300 a transaction to get your money out. And this can have an impact. Now, when you have this many people buying Bitcoin, 20, 30 million, 40 million wallets out there, and you can only process, I don't know how many transactions in a block, whatever, a couple of thousand transactions in a block, it's not a good thing. And so again, it only breaks when it goes the other way.
Right. Thank you very much.